Hello again, everybody, and welcome to this long weekend edition of Under the Macroscope. And this week, we are going to refer to a very relevant topic to the week that is past, and that being the additional stimulus package that was announced by Joe Biden in the US. More on that later, as well as the vaccine program and its rollout around the world. But we're going to use this podcast to reflect on Q1 of 2021 and how things have played out across the globe. I'm joined, as usual, by Skybound Capital's chief strategist in the UK office, Jabir Sadawala. Jabir, I was reflecting on one of Skybound Capital's colleagues' week in review and looking at the 12-month numbers of the major indices around the world, the FTSE, the S&P 500, the NASDAQ. Staggering numbers compared to precisely a year ago, the percentage rise in those indices. Is this reality or is it fantasy?
Yeah, I mean, it's a great question. And on that point, actually, only yesterday I was looking at the year-to-date numbers. Because, given the way the world has gone, rising yields and all the volatility, anyone would be forgiven for thinking it must be quite a rough market out there. But I mean, here are just a handful of numbers, Matt. Okay, the Dow Jones year-to-date up nearly 8%. S&P up just over 6. FTSE up 4.5. DAX, Germany's stock market, up nearly 10. I'm like, where the hell did that come from? Especially with all the European vaccine stories. The French market, the CAC 40, up also nearly 10, and so on it goes. I mean, there are some impressive numbers out of Europe. So, is it fantasy, reality? I think we've got to be really careful here because I came across an interesting article that actually breaks down the performance by various sectors, for instance. This was actually an analysis that was done courtesy of Robeco, but the source comes from a wide range of different areas. And they look at three different categories: the percentage of stocks experiencing negative absolute returns over a long period of time, 1980 to 2020, so that's 40 years. Likewise, percentage of stocks experiencing negative excess returns. And then the percentage of stocks defined as mega winners over that same period. And it's startling. The first two columns, you're looking at percentages between the 40 to 60% range. Remember, negative returns, absolute and excess. But when you look at the mega winners, it's only around 5 to 10%. So I think it gives you an idea of how skewed and distorted this rally has been. If you weren't in the one arguably most important sector, technology, you missed it. It's as simple as that. You just missed it. So and there are others, of course. I mean, I'm kind of generalizing there, but it just shows that don't try and time the market. It's not worth it. You've got to be damn good. You really do. Just stay in there. Be patient. Patient capital, as we've often spoken about. That's what you have to do in order to get these returns and capture the market.
As we've started this podcast series during the first quarter of 2021, cryptocurrencies have been a fairly regular theme. They've come up in various guises on the podcast, but in the last 2 weeks, we've seen quite a lot of noise from a number of quarters around revenue services, tax revenue services, getting interested in how they are going to tax gains, which is it's brought another element of regulation to this debate.
Yeah, exactly. And I think that's bedding down the big issue going forward that all central banks and governments are going to face, is how do we pay our way out of this debt? So they're actually setting the scene for what they can get their hands on. It really is the single biggest issue. And cryptos are no different. I mean, we've seen some significant advances here. We spoke about this last week in terms of the EU's new digital currency exploits. We know that China has been very active in this space. Um, and I think it's paving the way now to encompass a wide range of different securities that people can trade. The authorities are clearly picking up on the fact that, and you can see this in Bitcoin price, which has remained remarkably steady. The authorities are picking up on the fact that there's huge pent-up demand now. So I see Elon Musk a week or two ago actually has started accepting payment in Bitcoin. Um, and I think they want to be there, i.e. the authorities, in order to be able to collect the tax revenues that they need for when these payments start.
At the start
Yeah.
of that answer, you said, pay our way out of this debt. It gives me a seamless link to our next topic, which is the announcement this week of a further stimulus package, and in the US by Joe Biden. Now, as with many of these things, uh, the payment terms, so to speak, are over 12 years. So beyond any possible presidential term, is this a case of, well, I'm going to put some plans in place, but I'm going to leave it for somebody else to clean up uh, after I've gone?
Yeah, exactly. I think it is just that. It's the old famous adage, just kick the can down the road. That's all we ever seem to do. And it's come to define certainly Western democracies, where time as president or prime minister ranges from 4 to 5 years, roughly. It's so easy, isn't it? I mean, if you look in the bond markets, for instance, the advent of the 30-year and especially the 50-year. I mean, let's face it, who's going to be around that long? It's so easy just to package something up into a period of time which doesn't span an entire lifetime, but certainly goes halfway through. Um, it's a great soundbite. And that's what we're seeing now. And by contrast, as critical as the world may be of, let's say, administrations that are seen as perhaps more dictatorial just because they don't conform to Western standards, um, you have regimes like those in China, for instance, where it's all about planning for the long game. And critically, they are around to see it through. And this is a fundamental difference as far as I'm concerned. Um, we are seeing now the next phase of US politics, particularly spending. Biden wants to take it down the infrastructure route. We knew that was coming. Um, Big sums being advertised, I think in the order of 2 trillion. We've just had a nearly 2 trillion fiscal stimulus. Now another one on infrastructure, which will incorporate part of the Green Bill, but could also extend into a separate Green Bill. Um, who's going to be around? And the risk is, what if a newcomer then comes along and decides, okay, no, we're going to call it a halt there, and we're going to do have a complete change, possibly a U-turn. Um, it's no way to manage as far as I'm concerned, but that's all it is. It's just cosmetics.
Should we just call it the nature of politics globally?
Yes, absolutely. I think so.
We cannot finish a brief review of the first quarter without mention of the vaccine program, which has been critical to every country over the past 3 months. The rollout of vaccinations. Some big announcements in South Africa earlier this week around Johnson and Johnson.
Mhm.
But just your thoughts on where we've come from this quarter and the prospects that we face heading into Q2.
Well, for me, the whole thing just highlights how one should never listen to the mass media. Because when we started the year, people were saying, God, it's going to take decades to vaccinate the whole world. Um, And when I look at the situation right now, the most recent stats, nearly 600 million doses of various vaccines have been distributed around the world. Yes, it's a distorted picture. Those that have really committed to it have done incredibly well. We know about Israel. We know about the UK now, nearly half the adult population. Incidentally, some good news yesterday from one of the big vaccine makers in their trials on children, and it seems like it's incredibly effective on them. So I think what this teaches us is that we are now at the exponential part of the curve. The rollout here is massive. More vaccines are coming on supply, and at 600 million doses already from a world population of around, give or take, 8 billion. That's very, very good progress. I think this year, even with all the setbacks that we've had, the negative media around the Oxford AstraZeneca vaccine, the rather feeble rollout rather by Europe, I think we're going to see quite a lot of the globe vaccinated this year. I very much believe that's on the cards.
So more positive news than perhaps you expected 3 months ago on vaccinations. Another topic in recent weeks has been some really impressive growth forecasts from some of the world's major economies for 2021. I have to ask you, by way of finishing, your views on inflation now. Even pre-pandemic, you personally were warning of inflationary fears 2021 into 22.
Mm.
What's happened in the last 12 to 18 months done to change your view or not?
No change in views, Matt. I think if anything, it's actually made my conviction even stronger, that inflation is going to become a permanent problem. So where we are now is, pre-pandemic, I always felt that this year would be the year that we start to see inflation creep in. Um, and that was for a range of factors. What the pandemic has done is just introduce so much more money into the system, that it has done a couple of things. One is that it's put money back into people's bank accounts, and we know that. I mean, we spoke about this last week in the UK, an estimated 150 billion pounds now available for consumer spending. So imagine even only a percentage of that finds its way back into the market. Um, I think the other thing is look at the impact that it's had on supply lines and across the entire value chain. We've seen the problems that hiccups like the Suez Canal situation most recently can have. But we know, for instance, from freight and shipping indices, just how acute the problem is. Supply is lagging demand, and demand hasn't even really kicked off yet. Once by middle of the year, people are really back into full flow, which I believe will happen. How are we going to keep up with that demand? So I'm not for a moment advocating that we're going to, we're going back to the Weimar Republic, or we're going back to a Zimbabwean or Venezuelan, Argentinian style inflation era. Not at all. But I think we are moving towards an elevated inflation environment, where everyone's agreed so far is that we're coming off a low base. And yes, there is going to be a rise in inflation. The big debate is that temporary, or does it then become more, longer term? I believe it's the latter. But we'll find out. But don't forget that it wasn't that long ago that everybody was saying, no, it's not going to be an issue at all. So the needle has moved. Even those who are against the idea of inflation, the needle has moved to, no, there will be some. Okay, we accept that. So let's see.
Well, it seems that the only certainty at the moment, as it has been for the last year, is relative uncertainty. So plenty to keep our eyes and ears on as we move into Q2. Jabir, as always, great to catch up with you. Thank you to those who have subscribed to the podcast. It is available on Apple, Spotify, and the Google podcast platform for Android, and all the past podcast episodes available at Skybound Capital's website, www.skyboundcapital.com. So until next time on Under the Macroscope, have a great week, everyone.